guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the absolute best swing trading routine that I do every single Sunday to ensure that I'm going into the week with some sort of game plan, strategy, and approach to make as much money as I can. So I hope you guys all enjoy this, but more importantly, I actually hope you learn something. So make sure you guys like, subscribe. We do this every single week. And if you guys want to elevate your trading game, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you how to find undervalued stocks. We teach you our strategies, our approach, the psychology of a trader. You know, it's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So make sure you guys click that link, and we have an awesome sale going on. You guys can get 51% off by using code TRADER. So click that link, sign up, and guys, let's jump into this. So having a good swing trading routine is probably one of the best things you guys can do as a new trader, but more importantly, even as like a very advanced, maybe full-time trader. The reason I say this is because I always imagine the week ahead is like a football team right about to go into the Super Bowl. Do you think that team goes into it without a game plan, a strategy, an offensive playbook, but more importantly, a defensive playbook? No, yes, they have all that stuff. With trading, it's the same thing, right? You have to have an offense to find opportunity. You have to have a defense, which is going to be your risk management. And so you just got to be prepared. So what do you do? So the first thing that I do here is I review current positions. As of right now, we're in about 4 stocks. So we're in on VU, we're in on OBDC, we're in on Google, and then we're in on Amazon. We're in on all of these. So we'll go ahead and break down why we got in. Now, we got in VU, which is the Vanguard S&P 500 ETF. We got in on this one because it was undervalued on that RSI. It sold off quite a lot in a matter of a short period of time, which I know doesn't really sound like a strategy, so to speak, but for a ETF like VU, which represents the top 500 companies that's publicly traded, any sell-off in this is just an opportunity, and you got to take advantage of that. And so for me, as VU sells off, we're going to continue to buy these dips. I think dollar cost averaging this thing as the market sells off is one of the best things you guys can do. And right now, it's like investing into this all the way back in mid 2024. So yeah, I'm going to be buying some of the stock or this ETF. I think it carries a lot of potential for the long and the short run. All right. Another one is OBDC. This one here was actually a really, really good stock that we called out in the group. Now, why did we get on this one? Well, because it sold off. Well, yeah, but this one here was actually more of a swing trade. So let's break this down. The first thing we have here with the stock is this really, really nice trend line. You guys can see each and every time it hits this trend line, we just get natural tendencies of getting buying pressure. So it hits it here, buying pressure, buying pressure, buying pressure, buying pressure. In order for it to be a trend line, at least for me and my strategy, I want a minimum of 3 touches of buying pressure. And that's exactly what we have. As the stock sold off here from 1567 all the way down to 1460, for me and my approach here, I thought this: we could enter on that trend line or on a breakout on a lower time frame for a possible push going higher. The risk and rewards there, and it just looks really, really nice. Another thing here was the RSI is trading for a 36. The last time it was trading for that was back in this range where we saw this stock go from 14 all the way up to 15, 16. So a nice move in a short period of time. Now, we don't just base a trade based off that. You want to look at other indicators or some sort of lower time frame. So the lower time frame I used was the hourly chart here, and this is where we kind of got in. We saw this thing have this really general downward trend here, and the stock popped up. Let's go ahead and see. The stock popped out, started breaking out of this, and we thought, okay, as the stock continues to climb and push up above this, this moving average line, or all these moving average lines, which act as support and resistance, we can get in on that touch going down. So as this started to break down a little bit is where we started averaging and buying some shares, giving an average cost near around $15 even. Now, yes, this stock did sell off down to 14.90, but reality is you're never going to be able to buy at the peak bottom and sell at the peak top. So what are we doing now? We're seeing that if this trend can stay, this new trend line in this direction here. So if it does sell off past that 14.94, that's going to be our stop loss. And so, yeah, so now this stock is going to continue to rally. Great breakout approach, and we're just going to continue to hold. Another stock here is Google. And you guys will actually notice very, very similar approach here where it had that general downward trend, great breakout, and started to rally in this trend line. Now, that's kind of the thought process I had with this. We've averaged down on this stock several times, giving an average cost near and around 175. So we're about break even on this trade right now. Now, as far as it goes with like stop loss, I'm very confident holding this position for quite some time. A blue chip stock like Google, I know isn't going anywhere for the long run. You just got to hold it. So for me, we're just going to continue to hold this. Maybe a stop would be below 172, but when the time comes, we'll worry about this one here. And the reason I say that is because it has great support and it could be on the verge of a 200-day breakout on that daily time frame. So, for me, I think if we can get a push going higher, that would be great. And if it does sell off, we'll probably average down a little bit. All right, the last one here is Amazon, just taking pure advantage of the sell-off. You guys can see this nice trend line that we took advantage of. Great amount of buying pressure on it. Started averaging down very, very similar to Google. Now, you're probably saying, Carter, why do you average down? To get a good average price, with a stock, with blue chip stocks like Google, Amazon, and VU, which isn't a blue chip stock, but it's a well-established ETF. As it sells off, I average down. I don't want to wait for a breakout because the opportunity could miss. So I just average down, and I understand that I could hold this, position for a while now. All right. So these were all the stocks here that I'm holding. Opportunity-wise here, first one, Visa, ticker symbol V. You guys can see the great amount of support on this yellow line, which is a 50-day moving average line, undervalued on the RSI. Hourly time frame has this look, which looks very, very good. It has this general downward trend like such. So we're just going to keep our breakout above 347. So we'll throw an alert there, and if it gets pushed up, we'll probably pick up a couple of shares. Then we got KNTK, which looking at like the daily time frame, you guys can see the heavy support of that 200-day moving average line in the past, right? It hits it several times, establishing good support. It's very undervalued on the RSI. So we could see a nice amount of buying pressure going in that upward direction. Now, as far as breakouts go, for me, I'm liking this type of breakout right here, right below this, where we have a couple of resistance lines, hits it. So we'll throw an alert above 52 and see if we can get a push going higher here. Then we got IAG, very similar approach here, getting in on that breakout. You guys can kind of see just that general trend line. We'll call it the 200-day moving average line. So we're not getting in on the trend line and then have resistance of the 200-day. We'll just get in on the push going higher. Then we got HWM, and this is what I want to get at. Being a swing trader is boring. It's not this glorious lifestyle. Most swing traders spend hours looking at chart, right? I spend an hour scanning for opportunity, and these were the best of the best stocks that I came across. So this is why doing your due diligence, having that good routine is so incredibly important here. And this one here, heavy support on that 90-day moving average line, popped up to 114. You guys can see this nice wick of buying pressure right here. So we could see this thing go from, 124 to 140 in a short amount of time. Great buying pressure. Looking for a lower time frame here on the breakout. We're just going to continue to hold. Goldman Sachs, very similar. This one here, one of the things that I'm kind of looking at with this one is going to be like that 2 to 3 hour time frame here, just because it does look a little cleaner. And you guys can see just the heavy amount of resistance. So we'll throw an alert above that here or there. Then we got ETR. Looking at that hourly time frame here would be something like this here in that direction. Boom, boom. Alert would be above here, right? And so this is why being prepared, doing this stuff is going to make or break a trader. You guys can see that yellow line hitting it as resistance. We'll just throw an alert above that. And just because I throw an alert above something doesn't mean I'm going to get in. But what it does is it gives me opportunity. We already have an alert set for here above, the 90-day moving average line. Then we got Bank of America popped up, sold off. Looking at that daily, you guys can see, could see some support start stepping in very soon, near and around those moving average lines. So yes, that's what I'm looking for. That's why having a good swing trading routine is important. So if you guys want to learn how to find these stocks, check out our school, the scanners we use, all that good stuff. And don't forget, the broker I use is Moomoo. I'll put a link to them down below. You guys can get up to 20 free stock just by signing up. So click that link, sign up, and I'll see you guys in there. But take care.